Great. Hello, everyone, and thank you for your patience. We were having a few tech issues, and we're hoping to have a second speaker, surprise speaker, join us today. But in the meantime, let's go ahead and get started. So my name is Janice, and I am the director of the Low Income Taxpayer Clinic at Maryland Volunteer Lawyer Service. I would like to invite you to follow us on social media if you don't already. This webinar is being brought to you by MVLS, and we are always looking for volunteers for our pro bono cases. And this year especially, many people still have a need for assistance. So please do volunteer. If you are looking for a case, you can go to our pro bono portal, which is on our website here. And this is what it looks like. So the cases are classified according to the type of cases they are. And the little blue box on the end there is tax. Oops. And for our volunteers, not only do you get the benefit of helping people and feeling good about that, but you also have access to free recorded trainings in a variety of topics, including this topics like tax, like this one. So, and if you are not a volunteer, we do encourage you to sign up. Lots of great benefits, like I said, including feeling good about doing something helpful to someone. So definitely important work to do. So I'm going to now turn it over to Jim Leith, our local taxpayer advocate, to talk about financial disability and what does it mean. And hopefully we will be joined by a second speaker, but we'll start with Jim then. Thank you, Jim. Oh, one last thing, for anyone who has questions, please put them into the question box. If you'll write them in, we're going to try to hold off questions until the end of the presentation, just so we don't disrupt the flow. So, all right, thanks, Jim. Go ahead.
Okay, thank you, Janice, and I hope everyone is able to hear me okay. I, too, want to put a plug in for MVLS. I found our relationship to be beneficial both to the Taxpayer Advocate Service as well as hopefully to some of your pro bono attorneys who have come to me for phone numbers of managers and compliance functions, or just some procedural questions on how it is I would handle a particular set of facts and circumstances. So really, this training, this webinar is done in that same spirit of cooperation. As Janice said, my name's Jim Leith. I'm the IRS's local taxpayer advocate for the state of Maryland. I'm sort of you and your client's voice within IRS when you're having trouble cutting through some of the red tape. We're the office to come to. We work on behalf of individual taxpayers, business taxpayers, tax-exempt taxpayers. Many of our cases involve economic burden. Taxpayers need access to a refund that's being held. Taxpayers are under threat of lien, levy, or seizure, which would cause great financial distress. And we would be the people within IRS that you would come to advocate or to supplement your advocacy efforts on behalf of your clients. We also have criteria in which to bring in systemic burden cases where your client's been promised a reply or an answer or some assistance within a set period of time. That time has lapsed. They might not be facing a significant financial burden, but they do have the right to finality. So we would bring that case in under my discretion to use systemic. It's causing us, there's a systemic burden that the taxpayer is facing. We've got we're up to 18 case advocates now. The office is growing. We have the resources to address you and your clients' concerns. Certainly, I would welcome you to reach out if you have questions, concerns. If you do decide to sign up and take a case from Janice's inventory, I'd like to be always offer myself as a potential partner in that advocacy. Again, it could just be, where do I direct this type of inquiry? I'm not getting responses from the assigned IRS employee. Can you give me the number of a manager? Or if you need more, more enhanced advocacy, we stand ready to help. So one of the topics, and this is a narrow topic today, we see these types of financial disability cases in our inventory. I've been a local taxpayer advocate for 16 years now, so I've certainly seen a wide breadth of of cases. Janice sees them, so we thought this would be a good topic to cover today, because if the taxpayers do a refund and the service is saying no, that refund is barred by the refund statute, and the taxpayer was experiencing a financial disability around the time the return was prepared or was due, we're going to pursue relief pursuant to the statute, which we'll cover. So what does it mean? We'll go to the next slide. Again, there's the speakers. There's my contact information. That phone number is a direct dial. Mary Ann Witt is a revenue officer, technical advisor in the Taxpayer Advocate Service. So in a prior career, she was a revenue agent with the Internal Revenue Service. The Taxpayer Advocate Service recognized the need to have subject matter experts to help local taxpayer advocates like myself with complex cases. So we've set up the Technical Advisor Program. Mary Ann's been there quite a few years. Fortunately, she's on the East Coast like I am, so I get to use her when we have difficult cases involving the examination function of the Internal Revenue Service. She's trying to get onto the call. I expect her shortly. In the meantime, I'm more than comfortable with the material to go over. So I know the slides are very good. Janice put together the slides. This is really what it is that what we're sharing with you with regard to the slides is what my case advocates rely on for their guidance on how to work the case, as well as the practitioner community should become somewhat familiar with these Internal Revenue Manual citations. So the next slide we have is on financial disability, and unfortunately, I'm scrolling through the slides, and I'm hopeful that Janice can keep up with what it is I'm covering. This is a slide with the lengthy IRM site titled Financial Disability. Okay, so there's a statutory basis for this particular IRM site. It's section 6511, which tells us the general period of limitations for claims for credit or refund are suspended during the period that an individual is financially disabled, right? So we have the statutory authority to advocate for the release of a refund that on its face would appear barred by the refund statute. Okay, so we'll go to the next slide. So what is financial disability? What is financially disabled? How's it defined in the code, right? We have the statute. The IRM is going to elaborate a little more on the statutory language. So financially disabled means being unable to manage financial affairs. The inability must be due to a medically determinable mental or physical impairment. There's a further narrowing of the definition. The impairment must be expected to either result in death, have already lasted for a continuous period of not less than 12 months, or must be expected to last for a continuous period of not less than 12 months. Next slide, please. So the period of financial disability does not include any period in which the taxpayer's spouse or other person is authorized to act on behalf of the taxpayer in financial matters. Okay, so if the taxpayer had a power of attorney to handle their affairs during this period, the expectation would be that that power of attorney would make timely claim for refund via a 1040 or a amended tax return. Okay, so if that's the case, despite the taxpayer being disabled, again, if he empowered someone or she empowered someone to act on their behalf, that's going to be a bar, and it's not going to be an exception to the refund statute of limitations. And here's really the crux of this particular code section, because Paren 4 talks about the procedural requirements regarding impairment, right? So this is the information that my case advocates would ask either the taxpayer or someone now acting on their behalf, whether it's a clinician, like a clinic director such as Janice. We've got clinic directors at the University of Maryland School of Law. We've got a clinic director at the University of Baltimore School of Law. Taxpayers have provided consent for their congressional members to pursue relief through our office, right? That's a common entry way to get a case into the Taxpayer Advocate Service is have the member will go to a congressperson and say, I need help with the IRS, and our 10 members of Congress are going to direct that inquiry to me for assistance. So number 4 is what we're going to go back and tell them, here it is, this is what we need. Okay. Proof of the medically determined impairment must be submitted with the taxpayer's claim for credit or refund of tax. A written statement from the person signing the claim for credit or refund that no person, including the taxpayer's spouse, was authorized to act on behalf of the taxpayer during the period the taxpayer was prevented from managing his or her financial affairs. A written statement from a medical physician must name and describe the mental or physical impairment, give a medical opinion that the impairment prevented the taxpayer from managing his or her financial affairs, give a medical opinion that the impairment has had or is expected to have one of the effects described in 2B above, state to the best of the physician's knowledge the period during which the taxpayer was prevented from managing his or her financial affairs, and include a signed certification that to the best of the physician's knowledge and belief, the above representations are true, correct, and complete. And there's a note, which is helpful. In a recent court case, the court ruled that a statement provided by psychologists can be used in determining financial disability, okay? So, oftentimes, well, I can speak from experience, right? We've had years ago where psychologists would come in and say, this particular individual was having a psychological problems that resulted in his ability to prepare the return, to file the return timely, and the service was saying, well, that's not a physician, that's not an attending physician, it's not a general practitioner, it's not a specialist. We're not accepting that. Someone challenged that determination, and the court case cited there said, no, a statement provided by a psychologist can be used to determine financial disability. Next slide, please. Joint returns. Okay. Claims are for credit or refund during a period in which a joint return was filed cannot be denied solely because one of the spouses on the return was not financially disabled, right? And that's a frequent case. Lots of folks are using married filing, jointly filing status. If one was financially distressed or disabled and the other wasn't, that's not a bar to making a claim. Such claims should be considered as they relate to the financially disabled spouse. Okay, and there's a piece on mental impairment. A psychiatrist as opposed to a psychologist. An individual with a mental impairment who consults with a psychiatrist automatically has proof that the impairment continued for the entire period of consultation. If a mental impairment renders a person incapable of caring for himself or herself for part of a period, but not for other parts, a physician must, as required above, identify the period during which the taxpayer was prevented from managing his or her financial affairs. In order for the exception to apply, the physician must determine that the person was continuously impaired for a period described in 12B above. The 12-month period, at least for 12 months. The impairment may vary between a severe and moderate impairment during a period described in 12B above, but it may not vary between severely impaired and not impaired. So where there was a period of lucidity The service is going to expect that the taxpayer had the ability to file their claim, again, either via a 1040 or a 1040X. And it's going to be an extremely high hurdle for us to clear in advocating for the exception that we're discussing today. Next slide. There's an example here. And let me go over the example briefly. Okay, and Mary Ann Witt, my colleague from the Taxpayer Advocate Services Revenue Agent Advisor Group has joined. So welcome, Mary Ann. I know that you'll be a big help on the particularly the Q&A piece. Mary Ann, I'd also like you to address the piece on appeals. Is that okay?
Yeah, absolutely.
All right. So I'm running through the first example that we found in the IRM. I know these are sometimes difficult to follow along with, but you do have the benefit of having the slides in front of you. I'm sure Janice can send any practitioner out there a copy of the PowerPoint to refresh their recollection on what it is that we're covering today, as well as what we found to be very helpful examples. And we pull these examples out when I'm doing training on financial disability with my staff. You know, there's a turnover. We've got new people. We've got old people that may have forgotten, or older employees, meaning that's been here a while, may have not seen one of these cases in a year or two. So it's always good to provide the examples as a refresher. Taxpayer followed a timely return for tax year 2000. Taxpayer was entitled to claim a refund for 2000, but failed to submit it before the RSED on 4/15/2004, right? So just how you compute the RSED, right? In this instance, the tax return was due April 15th, 2001. You have 3 years from that date to get the return in and for the service to be legally obligated to give you your refund. Okay, so on May 1st, 2003, the taxpayer was diagnosed with Alzheimer's disease by his physician. And by November of 2003, 6 months later, the taxpayer's condition was so severe that he could not travel alone. On November 12, 2003, the taxpayer's spouse authorized a relative to act for the taxpayer. And on September 15, 2004, the relative filed a claim for a refund on behalf of the taxpayer for tax year 2002. This is a common scenario, I might add. Along with the claim, the taxpayer's physician stated that to the best of the physician's knowledge, taxpayer became permanently unable to manage the financial affairs by March 31st, 2003. The taxpayer qualifies for the financial disability exception for the 2000 tax year. The period of limitations for filing a claim for refund for tax year 2000 was suspended from March 31st, 2003 through November 11th, 2003. That's 225 days. Thus, the 225 days are added to the April 15th, 2004 date, the normal RSED, and the RSED for the taxpayer is now November 26, 2004. The claim was timely because it was filed on or before November 26, 2004. And look, you're going to have to utilize put your best foot forward with regard to advocacy on these types of cases. Okay, the service, it's a statutory exception, but oftentimes it's one that requires significant advocacy on behalf of the POA. And where that's futile, oftentimes taxpayers and their reps are going to come directly to IRS saying, my medical documentation was not looked at appropriately. They've made an adverse determination. I've received a disallowance letter. I think it's incorrect. I need someone. I need to elevate this. And I need the service to use their discretion. That's granted in this underlying statute. Let's go to slide 14. This is an example where the service, in fact, did disallow the claim. So this will show you the subtle differences in how the facts, circumstances, and supporting documentation are very, very, very important. Taxpayer filed a timely return for tax year 2000. Taxpayer was entitled to claim a refund for 2000, but failed to submit it before the RSED on 4/15/2004. So it really wasn't a timely return. Well, okay, so the return comes in after the RSED, that refund statute we talked about. On December 1st, 2005, the taxpayer was diagnosed with Alzheimer's disease by his physician. The physician believes the effects of the disease were evident as early as 2003, but the disease was intermittent until recently. On April 1st, 2006, the taxpayer's spouse authorized a relative to act for the taxpayer for year 2000. While the disease impaired taxpayer intermittently during the period of limitations for filing a claim for refunds for the 2000 tax year, to the extent that those intermittent periods he could not manage his financial affairs, he did not become impaired for a continuous period described in the IRM section we previously reviewed, which was paren 2, paren B, until late in 2005 after the RSED had passed. Accordingly, taxpayer does not qualify for the financial disability exception for the 2000 tax year, and the refund claim is not timely. Okay, so taxpayer will be issued a disallowance letter. We'll cover that in some upcoming slides. But again, where you disagree with that determination, I don't want you to think your advocacy necessarily has to end there. We can pursue it in appeals, come into the Taxpayer Advocate Service and said the facts are wrong. They didn't read it right, what have you. So we talked about the underlying statute that the IRM elaborates on. So this is Title 26, is the Internal Revenue Code. Section 6511A contains the statutory language, and this is the actual statutory language. Time for filing a claim for refund. You must file a claim for a credit or refund within 3 years from the date you filed your original return, or the date of the original return, or 2 years from the date you paid the tax, whatever is later. You did not file a claim within this period, you may no longer be entitled to a credit or a refund. So that's the statute that governs time for filing a claim for refund. The next slide will cover periods of financial disability, which would provide an exception to 6511A. If you are an individual, the period of limitations on credits and refunds can be suspended during periods when you cannot manage your financial affairs because of mental, physical, or mental impairment that is medically determinable and either has lasted or expected to last 12 months or could result in death. The period for filing the claim for refund will not be suspended for any time that someone else, such as your spouse or guardian, was authorized to act for you in financial matters. Okay, and again, we covered that in much greater detail when the IRS authored that particular IRM section in IRM 25. But this again, it details the type of medical opinion that is needed to support the exception to a barred claim for refund. We've covered that under the IRM. Go to slide 18. This provides further explanation on the limits on the amount of refund. It's pretty straightforward. It's sort of common sense. If you file your claim within 3 years after your return, the credit or refund cannot be more than the par of the tax paid within those 3 years before you filed the claim. If you file a claim after the 3-year period, but within 2 years from the time you paid the tax, the credit or refund cannot be more than the tax you paid within the 2 years immediately before you file the return. Okay, that's fairly self-explanatory. There's certainly not much controversy or advocacy required in implementing that particular provision. I'm going to have Mary Ann cover the appeal within the IRS. And the appeal is important because the tax examiner who's looking at the supporting document, the documentation to support the exception, right? They're going to really just look at the four corners of the document. And if they make an adverse determination and they provide either for a partial disallowance or a full disallowance, you're going to get your appeal rights. In instances involving financial disability, appeals is, I think, a good alternative because appeals is going to not only have the documentation that was set in to the tax examiner in support of the exception for financial disability, they're also going to interview. They're also going to have an independent appeals conference where they'll have an opportunity to talk to the POA, talk to the taxpayer, talk to the MVLS representative or University of Maryland School of Law representative or the UB School of Law representative, and you may be able to tell a compelling story that maybe wasn't quite captured in a 3 or 4 paragraph letter from the attending physician, right? And again, the different standard is they have to weigh hazards of litigation, all the prior court cases involving financial disability, whereas the tax examiner, under significant duress with high inventories, it's really simple to just issue the claim disallowance and move on to the next one. So, Mary Ann, do you want to go, if you could pick up on the appeal with an IRS slide?
Sure, absolutely. As with any other kind of disallowance, you can request an appeals conference, which will get you an independent review of the disallowance. And in this issue in particular, I think appeals, having that option is valuable because at the exam level, exam is all about books and records. And in my experience, I've seen the trickiest part of this issue is getting the doctor or the other medical professionals to specifically say in their letter that it is their medical opinion that the taxpayer was unable to manage their financial affairs. That's kind of tricky. So in my experience, what I've seen is exam will issue the disallowance letter because, the doctor did not say in my medical opinion. And so they'll issue a disallowance letter because it doesn't meet the parameters of the statute, what's required, or the revenue procedure. And then the taxpayer will go to appeals, which is, always going to be to their benefit because, as Jim explained, appeals has greater settlement authority. They can consider the hazards of litigation and the, what they assess, what they determine to be the taxpayers, the credibility of their testimony and other things, like as Jim was saying in interviewing the taxpayer, what's outside of the four corners of the medical documentation. So at the exam level, a 105, it's a 105C is the number of the letter, the disallowance letter. And that starts off, the date of that letter starts a 2-year period for the taxpayer to either request appeals or file suit in claims court or their district court. And the advocate's office can reach out to appeals if the case goes in that direction, and try and expedite and facilitate a favorable decision.
Right, and Mary Ann makes a good point. I mean, the involvement of the Taxpayer Advocate Service, just like the role of the POA, whether it's under the guise of an MVLS pro bono case or something that you're working on in your own private practice, your advocacy doesn't end. It could end with the disallowance letter, where you really don't feel that the taxpayer's oral statement or oral testimony is strong enough to warrant an appeal. Well, then maybe it would end there. But as Mary Ann said, it's the wide range of settlement authority that the assigned appeals officer has that's very attractive on the 50-50 case or the 5149 case, and anything above 5149. Your advocacy is going to continue into appeals. And again, if you need help getting it assigned to an appeals office, the case is languishing, come to us. I can either tell you what appeals group has the matter, and you may want to call them yourself, or or if it's unassigned, it's not even in a group yet, we could bring it in under the guise of systemic burden, right? The disallowance was issued a year ago. You made a timely appeal, and the case is languished. I just want to remind folks that administrative appeal can be very attractive, particularly where you really believe the facts, circumstances warrant the financial disability exception.
And Jim, if I can jump in for a second, also important to note that once the disallowance letter is issued and that 2-year period kicks off, if you get to the end of that 2-year period and nothing's moved or things are sort of languishing, but that 2-year statute of limitations date is you running up against it, the advocate's office can assist in recommending an extension of that 2-year period. Even at the end of that 2-year period, the IRS and the taxpayer can enter into an agreement to extend it, and the advocate's office can help in that regard too, if you find yourself in that scenario.
Yeah, thank you for that. Yeah, that's a good point, Mary Ann. And I know that your organization is rolling out some additional training to our case advocates for that, because cases are languishing, okay? And it's not purely due to COVID. There's all functions within IRS have been hit hard by attrition. They're having a hard time in our budgetary environment backfilling many crucial positions. So appeals of disallowance letters, they're languishing, whether it's penalty abatement, whether it's a financial disability exception. It's important that the client give you that 105C letter as soon as they receive it. Of course, if you're the authorized representative, you should always also be getting a copy of that, because 2 years comes awful quick, and if we really need additional time we need some more time to advocate on behalf of the taxpayer, meaning myself, yourselves on this call. Yes, we should get the extension to the statute signed by the taxpayer, his rep, and then countersigned by an IRS official. Gives everyone a little more breathing room. Okay, so the claim's not extinguished, and you know, we know that I don't know, how long do they, what's the typical date that those are extended for? At least probably another 2 years. Is that right, Mary Ann?
Well, to be honest, I've only seen one recently that was extended, and you're right. I think it was extended for, no, I think it was extended for 12 months.
Okay.
Because the case was already in appeals and assigned to an appeals officer.
Right. We've had 2 in our office, and the IRS executive agreed to give us an additional 2 years. Not that we need that much, but it's nice to have it. That's all. You know, it's
sure.
It's beneficial. Well, no, we've covered a lot. I'm sure that Janice will provide the slides to you. If there's questions, we'd be happy to answer them. If there's follow-ups, questions, we'd be happy to take your call. Again, the phone number for myself, it's provided in these slides. If you think that you have a case where the financial disability exception applies and you just want to have a double check it with me. I mean, maybe you're emotionally involved in this particular case and you want a fresh set of eyes to take a look at the facts and circumstances. I know Janice has always been a wonderful mentor to her volunteers, and I'm certainly make myself available. And if I'm stuck, I just go to Mary Ann and say, Mary Ann, I've got an interesting one here. Tell me what it is you think. How is it you would proceed? You know, we want to protect the taxpayer's right, you know, to his refund or her refund where the facts and circumstances warrant that. And there's resources available. You know, if you take on an MVLS case and it involves a potential financial disability matter, you know, you're not alone. We're here to help, and I would certainly would want you and encourage you to call on the expertise of both myself. I can get Mary Ann involved where I need help, and of course, you know, Janice is familiar with the material as well. So, Janice, are there any questions in the chat box, or are you aware of any questions or clarifications we need to cover?
Right. So at this point, this is a reminder to everyone listening that if you do have any questions, please go ahead and put them into the question box, and I'll be able to read them to Jim and Mary Ann. So please go ahead and do that. I have a couple of questions myself because I do also have a case right now that has been languishing, and I reached out to TAS and they were able to help move it forward to appeal. So it's finally there now after about 1.5 years or so. So hopefully that will continue to move forward. So I can definitely attest to the helpfulness of TAS in this process, because it really was very difficult to get things moving forward. So my question is about the written statement from the physician. Does it have to be a current written statement, like a contemporary statement written today saying that the client had these issues beforehand? Or can you use like medical records from that time period, which would indicate this length of time? So for example, my client had severe depression, and so we had medical records from over several year time period, showing that notes saying that she was depressed and not functional and things like that. So would medical records be sufficient, or do you need to get a note today from the doctor saying that during that time period they were not functional?
Mary Ann, could you take that?
The requirements are that there's a statement from the taxpayer's doctor, and you know, you can't, it can't be left up to the IRS to draw their own conclusions from the medical records, because being unable to handle your financial transactions, your situations, is that's a medical determination. So only the taxpayer's doctor can make.
Okay. And so if you were, not able to say that doctor is not, the patient is no longer, or the client is no longer seeing that doctor as a patient, you would still recommend trying to go back to that doctor and having them review their old medical records and writing a letter today saying that back in that time frame they would.
They could, if they could go back to the previous doctor. I don't. That seems like it would be a little tricky to me. But I think you might also try to, for example, if the taxpayer went to their current doctor and said, I have reviewed the taxpayer's medical records from this time period, and in my medical opinion, the taxpayer was financially disabled from date A to date B. That's, even though that doctor might not have been the taxpayer's doctor at that time, I think that that's something that would be worthwhile to get. You know, and at the exam level, they might say, well, this person wasn't the taxpayer's doctor at that time. That's when you go to appeals. You know, and I think in appeals, they would look at it differently.
Okay, so even if that doctor was not their doctor during the time period in question, if the current doctor can review that and say, well, based on this information, it would appear to me that the client was financially disabled at that time period.
Yeah. The key, in my experience, the key to the documentation is a statement from the doctor that says, it is my medical opinion that the taxpayer was financially or unable to manage their financial affairs. That's the most solid thing you could get, because, you know, where I've had to advocate in cases like that, you know, my first thought is the examiner is not a doctor. So how is he going to dispute this doctor who's, you know, putting it in writing that it's his qualified medical opinion, you know, and then you move the case to appeals.
Okay. All right.
So whether it's the taxpayer's, I guess the point is whether it's the taxpayer's current doctor or a previous doctor, you get what you can get, you know?
Okay. So, like, for example, my client saw multiple psychiatrists during this time frame, and doesn't keep in touch with any of them right now because they were all, you know, she was hospitalized and such. So, so perhaps getting a letter from a current physician who can review those old records and say, based on a review of the previous records, she was financially incapacitated at that time. Although today she's
exactly.
Okay. All right. Interesting. Okay. Great. And again, if anyone has any questions or that they would like to ask, please put them in the question box and I'm happy to share them. I do have a second question about the joint return. And Jim, I'm going to move to the slide which talks about the joint return, because I think you had said, let's see, the statute talks about joint returns where the claim is not filed, cannot be denied solely because one of the spouses on the return was not financially disabled. So can you elaborate on that? So one spouse is financially disabled and one is not? And
right, that would not be a total bar to the exception. You know, people. I mean, I guess that has to be elaborated on in the IRM, because there must have been some. And again, I don't know if they were court cases or someone interpreted the statute incorrectly for a long time. But I do believe there was a period in time where the service held the position that as long as one of the signers of the joint return was not financially disabled, there could be no exception. This is just clarifying that that's in fact not the case, that having one of the spouses having no physical or mental impairments does not preclude the joint taxpayers coming forward with a claim of financial disability. Marianne, do you recall, you know, why that Paren 5 in the IRM was added? Was there some disagreement?
I'm sure it came from court cases.
Right.
But it makes sense. It makes sense to me that if you were to simply disallow the exception for financial disability just because the taxpayer filed a joint return, that's not really fair to the non-financially disabled spouse, because it cuts him off from being able to take advantage of joint filing status.
Right.
And that's not really,
No, so it's really an equity thing. It's just not fair, right?
So so this means that they are able to claim the exception then, if
Yeah.
one of them was financially disabled.
Correct.
Yeah.
Okay. It's like a negative.
Yeah, like the way I like to. Yeah, when we cover this in training, we almost use like reverse logic. It's like if one of them, it's like a bunch of negatives. If one of the taxpayers was not financially disabled on a joint return, it is not a bar to proceeding with the exception.
Okay.
Exactly what
Well,
you said.
so wouldn't the argument be that the spouse, the non-financially disabled spouse, could have it could be
yeah, and that's why I don't know when this particular Paren 5 was added to the IRM. I can only assume it was either a chief counsel opinion or there was litigation that directed the service to include this in the IRM. I mean, we must have lost a bunch of cases where we were barring those. If one of the taxpayers was not financially disabled, I'm assuming that we barred them from taking advantage of the exception. So this IRM is providing clarifying language to the rest of the world that, in fact, having one spouse on a joint return who is not financially impaired does not preclude the taxpayers coming in with a claim for refund after the RSED based on the spouse who was financially disabled.
Okay.
Where there's a financial disability being alleged on a joint return, the service has to render a determination on that. They can't say, no, it was a joint return. Here's your disallowance letter. It has to be, yes, the taxpayers provided sufficient documentation to support the exception. The taxpayers, meaning both, it's really one entity for purposes of that tax return. Or, unfortunately, we've looked at the documentation provided by the doctor, and it doesn't meet the statutory requirements for a financial disability. But again, that's looking at the four corners of the medical documentation. It's not just looking at the joint return saying, nope, one of them should have handled the financial affairs, period.
Okay. So and so the refund then is not it's not the portion of the financially disabled spouses alone. It would cover both of them.
It's the entire claim. Right.
Okay. Interesting. Okay. Well, great. Thank you for elaborating on that. That's it was confusing. So.
It is.
All right. Again, if anyone has any last minute questions, please feel free to put them in. But I feel like this was pretty, very a really good review of the statute. And I think even though we have the statute here, there are still some areas of that perhaps need a little bit more elaboration and clarity. So I thank you, Jim, for doing that, and Mary Ann, thank you also for joining us and talking a little bit about appeals. I think that it's not something we see a lot of, but it certainly is something we do see, and it's very helpful to understand the IRS's approach to this and how best to prepare the information that they're going to require to make this decision, hopefully to benefit your client. So great.
Right.
So yeah.
All right. Well, again, I stand ready to help. Where I need help, I go to Mary Ann. But if anyone on the call encounters this, or really any other, for purposes of today's webinar, it was financial disability. But if there's any questions that folks may have concerning IRS compliance activities and whether those were appropriate or not appropriate, or whether there's an avenue to relief for your client, please give me a call. Where appropriate, we bring the case into TAS where I can tell you where it is you need to go and you feel comfortable doing that, then you just keep moving on. Again, because we certainly appreciate all the hard work Janice has put in at MVLS. I look at it, it's like a safety valve. All her cases could potentially be in my inventory. So, she's sharing the pain with me with regard to, again, taxpayers just not getting answers, not getting the right answer that they're entitled to. It's a sort of a self-fulfilling prophecy. There's a lot of work out there, and where my clinic directors are willing to take on that work, that's a benefit not only to me, but to the taxpayers who have found them, because they're certainly doing great work at all 3 clinics, and I'm appreciative of that. So if there's anything I can do to help anyone in this call, let me know.
Great. Well, thank you again, both of you. And I'm so glad, Marianne, you were able to join us, and thank you for trying so hard to get on. And thank you both for joining us. And if anyone has any further questions, again, the slide is showing their contact information, and the slides and the recording will be available to our volunteers. So if you would like a copy of that, please reach out to me. So thanks again, everyone.
Great.
And
thank you, Janice. Thank you, Marianne.
Thank you.
Thank you.
Take care.
Bye-bye.
Bye.